As always, guys, this is just for entertainment purposes only. This is not financial advice. Hey everyone, welcome back to my channel. I created this video to show you why I have HPQ in my portfolio. I think I had a few people asking me this. Why do you have HPQ, such a boring company? Well, it's probably a little bit less boring than you think, because you will make money if you own this stock. Well, not financial advice, by the way. This video is for entertainment only. But if you're curious to know why I own HPQ stock, then listen up. First, about the company, I have created videos about HPQ before, but we all know HPQ from computers, laptops, printers. So their main business is the personal systems. That's the laptops, the computers, and that is generating huge amount of revenue. And then you have the printer business that generates about 20% of revenue. Stock has been, not performing super this year, but not performing that bad either. So we are down about 14% year to date, by which it has outperformed the SP 500. But as you can see, it had a few down and up cycles, and right now we're looking at a potential down cycle. So I'm looking at this piece right here, this period right here, to buy a few extra shares. If it would stay at this point, probably 1 week from now, I will stock up on a few extra shares, increasing my position with 25%. It's a small position in my portfolio. I hold about 30 shares, but I am a fan of this company because of a few words, one sentence: they return value to shareholders. And lots of it. There is no company probably out there that is so determined to return value to shareholders. How are they doing that? The first way they are returning value to shareholders is dividends. So they have a 3.1 current dividend yield, and that's not so high. But what's more important, at least not so high for European investors like myself, but what is more important is the payout ratio. You see, it's very, very low. It's only 16%. That means it costs them very, very little to pay out those dividends to the shareholders. That's great. That means the dividend is very sustainable. They will be able to pay it for a very, very long time. You can also see that at their PE. Their PE is trading at 5.3. So that means it's really, really well valued right now. So why is it valued like that? When looking at the analyst predictions for HPQ, what do we see? We actually see that the coming years there will be a slight decline in earnings, and this is what probably is driving the stock price down. Growth has been very popular for the last 10 years, and by growth they probably mean companies growing to 20-30% per year, and a company with declining earnings is just not popular. Guys, it's not because a company has declining earnings that it's not worth anything. It's still worth something. So if I'm going to give you 100 euros for the rest of your life, for every month, if you give me 20 euros one-time payment, are you going to do it? Yeah, of course you're going to do it, even if you're not growing. Even if I'm giving you 100, then 90, then 80, you're going to do it because it's a good deal. You're going to make money on that, and that's why you're going to do it. Now, are the earnings going to decline that much? The revenue, by the way, is going to be pretty stable. I'm not so sure about that. It's probably one of the stocks that I disagree with the analysts. Now, I do think we're going to see a decline in 2022, but I don't think we're going to keep seeing a decline after that. I think we're going to go back to growth from 2023, especially later on, because laptops, there has been a laptop boom in 2020, and in 4 years it will be replaced in 2024, 2025. But there is more. I'll come back to that later, where I think HPQ will be growing. But apart from the earnings, there is something else, and that is the earnings per share. And what do we see? The earnings per share is growing according to analysts, and here they're completely correct. It is going to grow and it is related to the dilution that the company is doing, or rather not doing. So they are buying back shares, and here I come to the biggest argument of why you should buy HPQ. So first is Berkshire Hathaway, Warren Buffett, he bought the stock. Now, just because Warren buys a company, you should definitely not just buy the company. He might have very different reasons for buying the company than you have. So don't just blindly follow him. But he did buy a huge stake of 11 million shares here. So yeah, that is a huge buy. That is taking a lot of shares off the market. And when we're looking here, let's have a look. These are the total common shares outstanding. So what do we see? This here is 2017. That's 18, 19, 20. And what do we see? Declining. So it declined with 700 million from 1.7 billion to 1 billion, guys. To 1 billion. So that's, I mean, if they do that for another 10 years, it means their company is pretty much off the market. So, I mean, there is no way that the share price is not going to keep rising. Actually, even in a bear market, we've seen only a modest decline. But in the long term, together with why the purchase from Berkshire Hathaway important? Because those are shares that are off the market that are not going to be shorted. So that actually lowers the amount of shares that HP can buy from themselves. So this is putting a lot of upward pressure. You can see here about 200 billion shares here, at million shares here. That's a huge amount. So and how much did Berkshire bought? 11 million, so quite modest then. Here I see it. I thought that they had a bit more. Let me see the ownership. So yeah, institutions own 78%. So 800 million, yeah, so 11 million. Okay, so modest buy from Berkshire, but still 11 million shares that are off the market. Now the last point to growth, I think HPQ in their last earnings, they said that they want the company to grow more. So how are they doing that? They are investing. So one thing they're investing in, let me see, I found a nice article about this, is their on-demand inked for their printing business. That's a place that's growing fast. So that's right now already 30% growth over 2 years. So that's really a really fast growing business. And second thing is acquisitions. So they bought the company Plantronics. Now Plantronics, when we look at it, it's quite an old company, but they have a really visionary, they're really going into this hybrid working from home, and they're really advertising that part. So Poly has started to grow really fast recently. Well, Plantronics, Poly is a ticker symbol, sorry guys. So Plantronics or Poly, yeah, depending how you look at it. I haven't really looked at this company in detail, but I did look at the financials of this company, and what we're seeing is they become profitable this year. And what we're seeing is their earnings are going to double in the next 2 years. Now, by then it's 200 million. How much is that of HPQ revenue? It's probably 1%, but still that 1% is definitely going to contribute to the growth of HPQ, especially if they keep growing that much. And the question is, the combined company, HPQ and Poly, are they going to be able to grow faster because they can sell things together, sell things as one? So yeah, I mean, all in all, I think this is a pretty good acquisition. And I think on the long term, they're going to make money on that. So they did a good buy here. And the market is really down. There's a lot of smaller companies begging for money that were too deep in debt. and maybe HPQ can buy a few more the coming year. So we'll see about that. But that's why I have the thesis that HPQ, even though Q2 was very moderate growth, 4.9, the management did say they want to keep growing middle to even high single digits. And for now, look at what they've done for shareholders. Guys, there's not a company out there in the United States that has repurchased more shares in HPQ anywhere. And it's going to bring results. So I'm probably going to buy a few more shares of this company, maybe the coming week, and up my position. But again, if you like this company, just do your own analysis and draw your own conclusions. And if you like this video, please like, please subscribe, and see you next time.